Hi, Dr. Dolly, and thank you for all that you do. Dr. Bernstein and others mentioned that it can be beneficial to have a small amount of your portfolio in precious metals over long periods of time, just because with the volatility, you end up buying low and selling high a lot. But they always seem to say that they're not talking about bullion specifically and talking more about, say, gold mining stocks or something of that nature. I was wondering if you could speak as to why trading in bullion is not advisable. Is it because the fees every time you buy and sell that you're paying to the trader are just too much? Is it because you're not getting any dividends that you might get by investing in a business of gold mining? Yeah, just appreciate your thoughts. Thank you.
All right. I don't invest in gold bullion. The only gold I have is on my finger. I'm sure it's highly valuable. It's valuable to me. I'm not sure how many other people it's valuable to. If you melted it down, it might only be worth a few $100s. I don't know. But the reasons I don't invest in bullion are the same reasons I don't invest in Bitcoin or Ethereum or Dogecoin or whatever the newest cryptocurrency of the day is. Same reason I don't invest in yen or Canadian dollars or euros. Same reason I don't invest in commodities like oil. I prefer investments that have some sort of payment that they make, whether those are earnings in a stock, whether it pays it out as dividends or not. It's actually producing something. It's a viable going enterprise. It's a company. Or a fixed income investment that pays out interest, or a real estate investment that pays out rents. And so those are the investments I prefer. I like investments that outpace inflation, since that is the greatest real risk to an investor over the long run. And so I prefer investments that will provide a return above and beyond inflation. It doesn't mean every single fixed income investment I ever have provides a yield to do that, especially in our low interest rate environment and now rising inflation. But that's kind of the goal for me. Okay, I don't want to include asset classes that I don't expect a significant return from. Now, what's the return on gold? Well, 800 years ago, an ounce of gold bought a nice man's suit. Today, an ounce of gold buys a nice man's suit. It basically has kept up with inflation with severe volatility over the years, but kept up with inflation, not outpacing it. And, obviously there's costs of buying and selling and storing and insuring something like gold bullion. So after you pay all those, it's not even keeping up with inflation. So those are the main reasons I don't invest in it. But I don't think it's necessarily crazy to invest in it. You want to put 5% of your money into Bitcoin or gold or commodities or whatever, I don't think that's crazy. Go ahead and do it. Knock yourself out. If you really think it's an attractive investment, you want to hedge against inflation, or you just like it or whatever, that's fine to do. I would discourage you from putting 50% of your money into it. I think that's a mistake. But you want to put 5% of your money into something like that, knock yourself out. Go ahead. Okay. Chances are, even if you lost 5% of your portfolio, you would still be perfectly fine financially. And it's not going to have such a huge impact on your portfolio that it's going to sink you if it doesn't do very well. The reason Bill Bernstein doesn't like gold bullion in particular is because of that return issue. He prefers, if you're going to, allocate some money to precious metals, that you put it into precious metal mining stocks. Because if you look at the return of these stocks, these companies that produce profits, they are higher than inflation over the long run. Now, it's still impacted when there's a rush to gold in an economic downturn or when there's inflation fears. Those gold mining stocks obviously go up in value significantly. And so you still get some of that benefit that you're looking for when you buy gold, but without having to, insure the gold, number one, or go through the trouble of buying it off, a late night infomercial or a gold trader or wherever else people go to buy gold bullion. But you still get the benefit of that flight to gold in bad times. But he's quick to point out that this is something you really have to hold for a long run, because you might own it for 30 years and really only enjoy owning it for about 3 of those 30 years. The rest of the time you're just staring at it wondering why it's doing so crummy. And that's kind of, if you look at its performance, it has awesome performance a very small period of the time. And the rest of the time is kind of ho-hum, lots of volatility and not awesome performance. The last few years have been pretty good for gold, though, so make sure you're not just chasing performance when you're adding this to your account. It might be 30 years before you see another period of awesome gold returns. Hope that's helpful to you. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.
My dad, your host, Dr. Dahl, is a practicing emergency physician, blogger, author, and podcaster. He is not a licensed accountant, attorney, or financial advisor, so this podcast is for your entertainment and information only and should not be considered official, personalized financial advice.